H2FY25 and FY25 earnings conference call of Esconet Technologies Limited. We are happy to be hosting this call at Nuvama Professional Clients Group. Today, from the management team from Esconet Technologies, we have Mr. Santosh Agarwal, Mr. Sunil Agarwal, Mr. Rajneesh Pandey, Mr. Gaurav Gupta, and Mr. Keshav Parikh joining us from the management team, who would be happy to take you through the earnings performance. And post that, we'll open the floor for Q&A. Over to you, sir. Without much ado, I just would thank you for taking this time out and request you to please take us through the entire earnings performance. Thank you.
Thank you, Jagajani sir. This is the safe harbor statement. You must have gone through the financials which are already being published through NSE, and most of you must be aware of what are the last year's financials, what the last year's financials are. The previous year has been a very robust in terms of growth, not only in terms of revenue, but also on the bottom lines as well. Last year was actually the first year after we went public, and our performance has improved significantly. We also started the expansion and the additional requirements for capacity enhancements in our system by not only investing in the infrastructure, but also in human resources. A key milestone last year was acquisition of 70% in Fluidec IT Services. Fluidec IT Services is a cybersecurity company which had been doing great in this field since last few years. They were into existence since last almost 10 plus years to now, and basis the due diligence and whatever we understood about their business models, we decided to invest in the company. Last year was also, we achieved one more big milestone. Immediately after the IPO, we raised another round of funding via preferential allotment of 32.69 crores. So which not only helps us in strengthening our financial position in Esconet, but also helped us to improvise the service offerings of our subsidiary company, zCloud Services, where we have invested heavily and we continue to invest there to grow that business, as it has been a high margin business for us. So in the current year, we shall be focusing on cybersecurity, which is actually a diversification because we were not much into cybersecurity till now, and client expansion through both the offerings, our infrastructure offerings from Esconet, as well as the cloud offerings through zCloud, cloud and services offering through zCloud Services. Next, please. So these are the figures. Total revenue in last year was 233 crores, which it was 140 crores, which last year we clocked 233 crores, which was 65%, almost a 65% jump. The operating revenue increased by almost 63%. Profit before tax jumped up by 42%, and the PAT jumped up by 47%. Here, it would be worth noting that a significant contribution, almost 1.1 crores, profit was generated by zCloud, which was quite high as compared to the previous year of zCloud margins. The EPS also jumped up by 4.63% only. Although the reason was that the equity also expanded in the last year, and hence the earnings per share actually dropped in terms of percentage. Next. Our key financial drivers of revenue growth were robust. Sectoral expansion, we onboarded new customers, net new customer accounts. We did some strategic client acquisition despite the margins in the deal were very low. But those were strategic customers account, large enterprise accounts, and we wanted to enter those accounts. We had been trying since last many years, but we were not able to break through. Last year was a success with that for us, and this year we are expecting some repeat orders from those same accounts again. Last year was quite, there were lots of ups and downs because of external factors. Initially, the first half of last year was about the elections, which prevented us from getting a lot of government deals, which eventually happened in H2. There were a lot of turmoils in terms of foreign exchange, forex rates fluctuations, which at times ate up our margins. And we did, as I told you, that we have invested a lot in terms of manpower as well as infrastructure, warehousing facilities, etc. Next slide. This slide describes about our subsidiary Z Cloud Services, where revenue from operations grew by almost 68%, which was substantial for us. And total expense was approximately 3.75 crores. The profit before tax jumped by almost 786%. PAT grew by almost 745%, profit after tax. So this business will give us margin expansion, and that is the reason we are investing in this business. All these figures show our conviction that this business has a lot of growth potential, and not only growth potential, but also it gives us healthy margins. Next slide, please. So what exactly did we do last year, and this year what we plan to do? Last year was a significant year again for us. We got our partnership levels with NVIDIA was elevated from standard partner to a preferred partner, which enables us to get access to latest technology from NVIDIA, not only in terms of hardware, engineering samples, but also the software codes, the pre-launched software codes which we can try hands-on and gain expertise before it reaches to the customer and we have to work on them. We signed up with two companies. In next few slides, I'll tell you more about them. Skeleti and Cato. These are foreign companies. One is Skeleti is in storage domain, data storage domain, and Cato Networks is more of network and cybersecurity domain company. So we have signed partnership with these companies. I will tell you more about it in the next upcoming slides. We onboarded at least, well, it was actually 10 plus, 10 new client logos, which are from public sector also, as well as the enterprise space. Our headcount increased as compared to previous year by 21%, and we are still in a hiring mode. So this year also we plan to add significant number of people for our expanded plans. We hired a few resources in South India and started our South India operations with not much of success till now, but within this year, we hope to get significant inroads in South Indian market, especially Bangalore, Chennai, Hyderabad, etc. We formed a subsidiary company in Singapore typically for the purpose of there are certain customers who want who are either exempted from custom duties. So the Singapore entity helps us in billing them directly from overseas. And there are certain customers who want that material without reaching to India, without attracting Indian customs, should be directly redirected to them in their foreign entities. So this subsidiary will help us in catering to the needs of those strategic customers. As I told you, we did raise approximately around 33 crores last year through preferential allotments. Next slide, please. So in the previous slide, I mentioned Scarcity Software. Scarcity is a French company which does cloud-enabled file and object storage. Basically, it's a scale-out storage where the capacity of the storage can be expanded almost unlimited without any disruption or downtime to the existing data. So this is a strategic partnership where it plays additional role for us. We are in the process of getting our Hexadata servers certified for this software platform, and in turn we will be launching a few products which will be quite unique in their own domain, like a backup software appliance, backup hardware appliance, which will not only backup data but store data in a secure fashion, which could be said as like a ransomware proof storage. No ransomware attack can actually modify the data which is stored in that particular appliance. So it's a immutable object storage also. In designing this appliance, Scality is one partner. There are other two more partners with us who are actually working, and our Hexadata team is working jointly with those three companies, so that we are able to design it, test it out successfully, and launch it in the market. I'm sure there are not many other vendors globally who offer this kind of a product as of now. So it helps us in meeting the growing demand of the customers' current demands, and it helps us also in boosting our Hexadata sales. And because of this uniqueness, we should be able to, it will also help us in our margin expansions. Next slide, please. So as I mentioned about Cato Networks, it's really coming. It's born in the cloud startup. It started almost like 5-6 years back, and they have been acquiring customers left, right, center in the enterprise space in the US and European market. And Esconet has signed up a partnership with them for the India market. It's almost a hardware-less solution for networking. Most of the other solutions are typically hardware-oriented, or you need to buy 1, 2, 3, 4, 5 boxes to not only to network your servers and computers, but also secure them. So this is a unified product for networking and security. multi-locate, specifically for multi-locational customers who have global presence. This product gives us the opportunity to deliver managed services from Esconet. So that's the value addition what Esconet will do with this product. We have already closed our first orders with our customers on this technology, and we hope to do some significant numbers in this current year. Next slide, please. So as I mentioned in my previous slides, that we have invested in capacity expansion for the manufacturing facility for Hexadata. We have also commissioned a micro data center within our within the manufacturing facility for as a test bed for our systems. What we not only we design but we manufacture also. A great news which was published with the NSE as well as with it was on social media also a few days back, that we have been empaneled with government e-marketplace, which is the gateway to sell to the government today as an OEM vendor. So now Hexadata products can be bought by government and public sector customers through this platform. This year we will be focusing on HPC superclusters, and last year we closed multiple deals there in this domain. So this helps us because in each deal it may not be just 1, 2, or 3 servers. It will be a significantly higher number of servers, and a single deal can go high up as up to 500 servers also. Last year we launched based on new NVIDIA chips, H200, B200, and the GS200 GPUs, which are being well accepted by customers now. The work in progress, which we should be able to see in the current financial year, is as I said, the Hexadata Unified Backup Appliance. We are developing a software stack, our own IP, for data storage systems also. We are developing a stack for high performance computing, cluster management, operation management, and monitoring stack. The branding is almost done, but we are yet to come out in public domain about the branding and packaging of this product. These software stacks and our own IPs will not only give us USPs in sales, but also enhance our local content in the Make in India program, where we can be more competitive as against most other competitors. Next slide, please. On zCloud, we have observed that to be competitive, we need to upgrade our network infrastructure within the cloud services. So we were having 40 gigs of connectivity per physical server till last year, which we have refreshed with 100 gigs access network and a 400 gigs backbone network on the cloud systems. This helps us meet the new age workloads for customers and onboard new customers on our cloud system. Apart from that, we have also invested in adding compute capacity and storage capacities on zCloud. There is a development in progress, which is, again, we are trying to develop our own indigenous cloud platform, which will be our own intellectual property, which helps us bring Indian innovations and maintain data sovereignty as well. We are targeting, although we are still a little far away for that, but we are targeting METI empanelment so that we will be eligible to host government and public sector data on our cloud once that happens. And we are hiring strategic people for specifically for Z Cloud, which will help us expand our customer base and digital native segments, the new age born in the cloud customers. Next slide, please. So this is our new acquisition, which we have completed actually within this financial year. And as soon as the acquisition was completed, we got the good news that Fluidic became India's first and only accredited consulting organization to the National Critical Infrastructure Information Protection Center, which is a unit of NTRO directly being monitored by the NSA. So what does this mean for Fluidic? NCIIPC is an organization which is mandated to secure all the critical infrastructure of India, be it public, be it private, but if it's a large hospital, if it's a large healthcare facility, oil and gas sector, power sector, financial sector, banks, everything, all these things are considered as critical infrastructure. And NCIIPC is the body which has developed its own framework, cybersecurity framework, to protect these critical infrastructure. To implement this framework and to assess this framework, the requirements of the customer to implement this framework, they are getting they are trying to onboard consulting organizations. It's a very complex process to get through this accreditation. A lot of audits and checks are done for the background checks are done for the organization, and only after that the accreditation is given to any partner organization. And as I am presenting this, Fluidic is the only one who's got this accreditation in India. Others would be there in times to come. But having said that, Fluidic has an early mover advantage. Plus, it also guarantees the capabilities of Fluidic. Recently, Fluidic also closed a deal with an Indo-Japanese engineering consulting firm where they are doing some consulting engagement on cybersecurity. Fluidic also started offering service packages for regulated entities which are regulated by SEBI for SEBI's CSCRF compliance, which is I think in the next few weeks it will start. It is mandated to start. This provides a large market opportunity for Fluidic. Workforce expansion definitely is in progress. Now Fluidic has access to increased funds, and which helps Fluidic in expanding in the market. So one more good news from Fluidic we have received is they have partnered with a US listed EV technology firm for OT device security posture assessment. This also validates Fluidic global capabilities. Next slide, please. So these are some of the customer logos. Some are somewhere are existing. Some of them we have onboarded in the last year, and new logos would be coming on these slides very soon. With this, I end my presentation. Next slide, please. Thank you for your time and patience to hear me out. Over to you, Jigar sir.
Yes, sir. Thank you very much for an insightful presentation. We will now start the Q&A session. So anyone who wants to ask a question, please press the raise hand button, and we will take the questions one by one. So we'll just pause for 1 minute for everyone to press the raise hand button, whoever has a question. So we'll start the question answer session with Agastya Dave. Agastya, can you please unmute and ask your question? Okay, so Agastya has dropped. We have the first question from Ashok Kumar. Mr. Ashok Kumar, can you please unmute and ask your question?
Am I audible now?
Yes,
Yeah.
you are audible.
Yes, yes.
Thank you for your presentation, sir. We can see that great developments are there in the company, and we are hopeful of many more products and increased turnover and profitability in the future. So just to get some ideas, I want some basic estimates that with this kind of funding available and the growth prospects as you have enumerated, what kind of growth we can see in the next 3 years, a rough estimate which we can target.
Ashokji,
I'm not talking of profitability, sir. I'm
not discussing profitability here either. But at the same time,
yeah,
numbers would be very hard. But the growth, what you have seen this year, we expect some similar growths for the current year also. So what we saw in the last year.
Very good. Thank you.
Going forward in the next 2 years,
Ji.
instead of top lines, we would be working more towards expansion of bottom lines, because most of our baseline work would have been done till now. Last year we did a lot. This year we'll continue to do the same. But by next year, we would be ready for our targets to on the bottom line itself.
Okay,
I expect Z Cloud as well as Fluidic, both engines will fire, and they will be adding significant value to the profitability of the company next year, apart from Esconet itself.
So my next query is this Z Cloud, which you have started in the Singapore. That has gone from
Z Cloud is a pure Indian entity, sir.
It has come from 3 crore to almost 5.2 crore in the past year. What
Correct.
kind of growth do we expect in this? Because it's a very profitable segment.
So in the current year, I feel easily we should be seeing a growth of around 50 to 60% in terms of revenues.
Okay. Okay. Achha. And this cyber security, sir, because this was already there probably in the form of some other company which you have taken over, isn't it?
Yeah, that was an existing company where we have invested. We have taken over 70%.
So what is the turnover of that company in the past year, and how much we expect?
So last year, the turnover was approximately around 2.5 crores. Okay. Apart from that, they were doing some business under a different entity also, which has been wound off. There's no second entity with them now. The entire business has been transferred to Fluidic from this year. They should be able to clock easily approximately around 15 to 20 crores this year. That's what my guesstimate is.
Very good, because that cyber security is a field, probably a growing field, and somewhat more profitable also.
Yes, of course. And that's the reason we took that strategic call of investment in that company.
Now, another thing, sir, just to get an idea, this is Scality and Catco.
Catco.
Catco. These are basically, product, or let's say technical firms which are giving you new product or new facility available. Do
Correct.
we also get some additional clients because of these collaborations?
Yes, we do get to connect with their global customers who are present in India. That is one, although it may not be very significant, but it definitely adds a new customer account to our portfolio. Having said that, these products are unique in themselves, and once the customer understands the value proposition of these products, definitely the market opens up for us.
And
So
my last small question will be this: a lot of talk of these tariffs and all that. Do we really get affected by these tariffs which get imposed by?
At the moment, we are not exporting any product from India. So we do not see any impact of the US tariffs as of now. In future, let's see. Most of our business is happening. 95% of our business is still happening in India. So not much of that. But yes, if export restrictions come into place, the way US has been playing around, there could be certain products which could come under a shortage.
Okay.
So
Thank
that
you.
risk is there, but
Yeah,
revenue
Ashokji,
risk
I
is
think,
not there.
yeah.
So thank you
Ashokji,
so much,
so
sir. I'm done with the questions. Thank you.
thank you so much, Ashokji. Thank you. So the next question we have is from Agastya Dave. Agastya, I'm unmuting. Please go ahead with your question.
Am I audible?
Yes.
Yeah, Agastya.
Yeah, Jigar, there is always a bit of a lag when you allow us to speak or when I'm using the browser. So that's why I couldn't speak in the time allocated.
Oh, apologies for that.
Uh,
Yeah.
no problem, no problem. Not your mistake, sir. If anything, it's fine. Santoshi, hello. How are you, sir?
I'm good. How are you?
First class, sir. Sir, last time we had a conversation, you had mentioned that there were demand challenges during the election year, and just to keep the shop running, so to speak, you had to dabble in certain contracts which otherwise you wouldn't have, and they were all at a significantly lower margin.
Correct.
H2 saw certain improvement in margins across the board, but they were still lower than what your historic margins have been. And now, given what even the previous speaker was talking about, the way the mix is going to change over a period of time, margins are definitely they should be improving. So, how do you see the margin for the short term, the very short term, for the next year? Do you see mean reversion to the previous margins in the base business? And how long do you see? So, you mentioned that the year after that, you will see significant rises because of the new businesses that you have added. Can you quantify the magnitude there, sir? What are we looking at here?
So Agastya, I would say that in the current year, margins will definitely improve. We are working towards that, but may or may not be exceeding last year's margin. Now, when I say previous year, it's 23-24 typically.
Okay. Okay.
But for next year, the plan what we have done, I'm sure that we would be exceeding that those margin percentages by far.
So if I look
In
at the
the
gross
immediate
margins,
short,
sir,
sorry.
if I look at the gross margins for FY25, you were at 15%. In the previous year, you were at 20%. So basically, just to clarify, you are saying not as good as 20%, but definitely much better than 15%.
Yeah, but that's our what we are trying to do. But what happens, Agastya ji, sometimes there are deals, typically, I would say, very large deals, which will come to you
Right.
from a very strategic customer account. There,
Right.
those accounts, it is hard for us to say no.
Right.
Because otherwise they are giving you a significant amount of business year on year, and the margins are also decent there. But that one large deal actually skews up the entire gross margin. So
Right.
if a customer today, tomorrow offers me a 100 crore deal with a gross margin of just 1%.
Right.
There's no value addition from my side in that deal, but
Yeah.
1% is also 1 crore rupees, which I would not want to refuse as
Right.
such. But overall, the revenue goes up, shoots up like anything. The growth seems to be rocketing, but the margins do not rocket up.
Right. So one clarification on the
That is
scale.
the only challenge what we faced last
Faced
year,
last year.
and this
Yeah,
year
yeah.
also I am seeing similar kind of deal happening, which is still in the pipeline. But I'm trying to build up on margins in that deal also. Let me see how successful we would be there.
Understood, sir. So in this Skeleti tie-up, I couldn't understand one thing. So are they basically infrastructure as a service,
No,
or
no, no,
are
no.
they a SaaS
They
offering?
no, neither they are SaaS nor they are infrastructure as a service. They are a software development company. They have developed their software product and they sell that software under a subscription model. So
Right.
it is not a perpetual software, of course. It is a
Okay.
subscription where you buy it for say 5 years, 3 years, or 10 years, whatever you decide in the beginning. You pay for that,
Right.
and you can
Right.
keep on using that software.
And you said that the data will be backed up. So that will be backed up on your servers or on their
Yes,
servers.
on our servers only.
Okay. So they are
This
just
is a
doing an
product which will
application.
be sold to a customer, and the customer can use it for backing his data to the server.
Right. So they are basically an API.
They're a software company, simple
They're a
software
software,
company.
pure software company. Okay. Okay.
They
Uh,
do
uh,
manufacture their own hardware appliances also
right.
in France and US,
Right.
but at the same time they refrain to sell it in India because of two things. One is they do not have a support service network for hardware in India.
Right.
Secondly, their cost for hardware appliances is very, very high.
Understood.
Pricing
So
is
what?
very high.
Final question, sir. With all these tie-ups that you have done and the acquisitions that you have made, what's your TAM now? What is your total TAM, and how much can you mine that, and at what pace? Again, I'm talking about a much longer term picture here. And are there any other acquisitions that you are looking at?
Immediately acquisition, no, not we are not considering any acquisition as of now until unless some surprise elements comes into place. But immediately we do not have any plans for any kind of acquisition as we speak.
Okay.
About the time what you asked, have not done that math till now. I will have to sit across and do that, but I'm sure with the Fluidec acquisition, our TAM will increase significantly. One is we will be not only we will be able to service our existing customers, which is quite significant in number, and generate additional revenue from those same customer accounts, where the cost of sales is also very low for us because there is already a customer relationship in place. Apart from
Understood.
that, when I said NCIIPC, which means it opens up a gate for us to enter those accounts where we would have not even thought of till now.
Understood, sir. Understood.
All infrastructure, all the infrastructure which we are talking about, critical infrastructure, are all large companies, whether they are
Yeah.
public sector, whether they are private sector.
Right. Right. Great, sir. Thank you very much for answering my questions. One request, sir, kindly move to quarterly results. 6 months is too large a gap, sir. I keep on asking this again and again, starting pretty much from the AGM onwards. So please do it. The more you interact with us, the better our understanding would be, and it would be good for the company as well as the investors. So kindly consider it. Jigarji, a question to you. This is a normal quarterly earnings call, right? So the transcript will be posted on the exchanges?
Yes, it will be.
Okay, thank you. Thank you, Santoshji. All the best, sir. And thank you, Jigarji, for hosting this. Thank you.
Thank you, Agastya. Thank you. The next question we will take is from Prasenjit.
Good evening, everyone. So I am audible?
Yes,
Yes,
you're allowed.
thank you.
Okay. Thank you for the opportunity. So my first question is, as we have now different business segment, new business segment, I'd rather say, what kind of operating margin this new segment like cyber security or even Z Cloud that we are looking for?
Zcloud has been approximately around 20 to 25% operating margin. Correct me if I'm wrong, Keshav. Maybe more. Keshav.
Sir, it is 30 between 35%.
The 35% is what is right now. But
Yes.
it should sustain at approximately around 20 to 25% operating margin. The Fluidec operating margin should also be similar, 25 to 30% operating margin. I'm eyeing easily on from that company as well.
Okay. And
That's the
going
trust.
forward, from our entire revenue, like how much revenue mixed up or how much revenue share you are expecting from this cybersecurity division, Z Cloud division, and Hexadata division? Because as I know that right now, more than 90% is from Hexadata. So going forward, 1 year or 2 year, what kind of breakup you are targeting?
Sorry, I would want to correct you here. More than 90% from Hexadata is not correct. Hexadata revenue for us is still approximately around 35%. It is 1/3 of our business. The rest of the revenue is still coming from various system integration activities for the last financial year and services system integration. And the component from Z Cloud revenue is only around 5 crores out of approximately around 235 crores consolidated revenue clocked last year. This year, I'm eyeing somewhere around 8.5 crores from Z Cloud, approximately around 15 to 20 crores from Fluidec. And the growth rate from Fluidec and Z Cloud, I'm expecting, these are my expectations from them, should be approximately around 30%, 30 to 40%, at least bare minimum for the next upcoming 3 to 4 years time.
Okay. And one last final question, like I have noticed that in the H2, your employee cost was around 3.12 crore. So we can say a rough monthly run rate of 52 lakhs kind of. So just a rough figure. So in this financial year, so already we are around 3 months. So what kind of employee cost run rate we can expect in this year?
The employee cost will go up by around 30 to 40% this year. There'll be new headcount coming in, and there has been some upward revision in the existing salaries also. So all put together, 30% approximately the total employee cost will go up.
And for the next year, like FY27, will it, increase at similar pace, or then that will be just an yearly incremental?
Next year, it may not increase at that rate. It will be slightly less. I cannot have that number as of now. But yes, next year, the hiring plans would be much more slower for us.
Okay, thank you. And that's all from my side.
Thank you, Prasenjit.
Thank you, Prasenjit. Anybody else who wants to ask a question, please press the raise hand button. Yes, we have the next question from Nikhil. Please go ahead, Nikhil.
Yeah, hi, Santoshji. I hope you're doing good. Am
Hello,
I
Nikhil.
audible?
Yes, you are audible, Nikhilji.
Okay. So one question is around your acquisition of Fluidtech. Can you help explain us how does the business work? Like, is it one time in nature, or is it recurring revenue with any client? The second question is, does both these businesses, which is Z Cloud and Fluidtech, help you cross-sell more services to clients that you acquired in base business?
So we are lucky that we have Gaurav Gupta, the CEO of Fluidec, with us. And I will request Gaurav to take this question. Gaurav?
Yes. Thank you, sir. Mr. Prasanji, am I audible to you?
Yeah, you are audible, sir.
Okay, all right. So I'll answer the first question. So Fluidic is a tech consulting and services company, where we essentially bring comprehensive set of services for customers across enterprise and government sectors. What we do is help them solve problems of identifying security posture, fixing them, and then maintaining security posture. In the backdrop of which, from a business standpoint, there are projects of one-time implementation, one-time assessment, which is consulting, one-time implementation of solutions, and then to maintain security posture is always important. Usually, most of the time, these projects, these engagements would run into managed security services. So there is a larger recurring revenue that gets bound to it. And these engagements, since they are very tech intensive and they are sensitive in nature, generally have a good stickiness with the customer. The attrition is low. The services are delivered well. On your second part, since there are very good, and okay, I will also add to that since you will be happy. With NCIPC unique credential coming to us, it actually opens door to a larger government picture where there were a lot of entry barriers other than Big Four. So we are right now in a position where 2 out of the Big Four, we are told this is official, that would be able to qualify to this credential by end of this year. So we are in a very strong, unique standing position. Since the sales cycles of government contracts, especially in something which is just coming as a national standard, so the sales cycles are longer. Discussions are happening everywhere with nearly every state government on protecting their cyber security posture, which means essentially by the end of a particular period of time, maybe 10 to 14 months, we would have team contracts with several state governments. The revenue would shoot up in a very steep growth curve. That is anticipated, unless the force majeure comes to play. I hope you understand. Now, on the second part, where there are existing customer relationships in the small, medium, and large enterprise segments of industries at Esconet, we are very easily able to leverage them because compared to Fluidex, Esconet has been a larger sales strong organization. We have been more tech focused, therefore that strategic acquisition by Esconet. So we will be able to leverage those relationships, build a stronger value proposition, and help them secure the workloads that they have been posting with Esconet or Zcloud or otherwise. And with security services, that relationship grows more in value, if that answers your question.
Yeah. Thank you so much for that. One follow-up on Fluid Tech is, what is the working capital cycle usually for this business?
Working capital cycle, typically when we bring in new source of funds, it helps us last more beyond the driven which we have to, which we use to build workforce. Right, for example, right now there is a new stream of business mentioned with NCIPC. There is not enough talent in the country. We are growing talent. We are building. We've partnered with government bodies to write the BTech course also for them. So to answer your question, in these turbulent times, the working capital cycle might go up to anything between 8 to 14 months, but otherwise, generally we are shorter because in 6 months we are able to generate returns on the investment we have.
Let me put that question in a different way, Gauravji. Basically, what I meant is, when you start billing, how long does it take for your clients to pay you in days or months?
Typically, that will be 30 to 45 days time cycle.
Usually, yes.
Okay. And Santoshji, if Z Cloud today is doing, let's say, 30 to 35% EBITDA margin. Why do you expect it to come down to 20-25%? And usually, what kind of capital, when let's say you deploy 10 crores in Z Cloud, so what kind of revenues can that make?
So there is no fixed formula for you to determine that if you put 10 crores, that will make 5 crores every year. Certain cases, it will be like if you put 10 crores, it will just make 2 crores per year. But in that case, the remaining usable life of that equipment would be very high. But in certain cases where the remaining usable life of that equipment is very, very short, your revenues would be high. That's the way it works. Coming down to your first question was, why do you think that it is going to drop? So, there was a gap in between. We have been leveraging till now many salespersons from Esconet. Now, cloud sales is a different art altogether as compared to standard infrastructure, traditional infrastructure sales. People who have been selling cloud and cloud, so OPEX model, ARR models, they understand that terminology. The traditional infrastructure seller is not interested in cloud sales because for him, the same deal size becomes much more smaller because for him, selling a hardware box worth 1 crore and getting a monthly revenue of 10 lakh rupees out of it, which one is better from business standpoint? Getting a monthly revenue of 10 lakhs is better. But the salesperson does not understand this, or the salesperson has a mindset of achieving his numbers. For that, he would try to quickly sell that box one time to the customer at a price of 1 crore. So that is the kind of resistance what we are seeing. So we are trying to hire dedicated salespeople for the cloud. Apart from that, there are other product developments happening. There will be additional cost towards those development. There would be product managers in Z Cloud who can directly connect with customers and try to cross-sell those products within from Z Cloud itself. And they'll be specialized people. So cost of manpower goes up. The infrastructure spend will increase, is already increasing. Last year we did a significant spend, and this year also it will keep on happening. We have expanded the capacity to almost like 3x. Now depreciation costs will go up. I'm trying to understand what I'm saying, what I'm trying to say.
Yes. Yeah. So what I grasp, I mean, what I understand by what you're saying, this is going to be a temporary dip, and then it comes back up once utilization improves.
Yes. But
So
beyond a certain point also, once you grow very large, you tend to go after the bigger deals. There, the margins may not be so high. Either you still remain in that small customer segment, billing 1,000 rupees per month or 5,000 rupees per month to every customer and be happy. But to grow beyond a certain level, you have to get to customers who can pay you 20 lakh rupees or 50 lakh rupees a month. There, the margin may not be that high. That's the reason, on an average, the margins will, the gross margin itself will shrink up a little.
got it. So, I mean, it's more related to how you want to scale the business, and to achieve higher scales, you would want to make your rates more competitive in the market.
Correct.
My one last question is on, you mentioned something about your cloud platform. So far, Z Cloud was linked to data recovery as a service, sort of a business.
It was not data recovery. It was a cloud platform, but we were relying on third-party hypervisors and cloud platforms till now. So the software stack was bought from somewhere else. There was a cost to it. And once we have our own, our input cost actually reduces. There will definitely be a one-time cost and there will be maintenance cost to that also. But that may be significantly lesser as compared to what we might be incurring today.
Okay. So this is a full-fledged cloud offering, actually.
When you say full-fledged, if you are comparing me with a GCP or Azure or AWS, I might not be having certain services, but
Yes.
there'll be other services which zCloud will have, and these services may not be able to offer them. The kind of customization and flexibility what we can offer to the customer, no hyperscaler in this world can give. Apart from that, there could be certain unique features again on our cloud which they will not be able to give. What they are giving is a large CDN, content delivery network, and which is their own captive CDN. For us, we have to rely on third-party CDNs because CDN itself, creating a CDN is a multi-million-dollar investment.
Got it. Sorry, just adding one more question. Today, Exadata is at around 35% of the base business. Where do you see that over the next few years?
Next few years, I see that as a bigger business than the rest of it. That's simple.
Perfect. Perfect. Thank you so much.
Thank you.
And all the best.
Yeah.
Thank you, Nikhil. So anyone who wants to ask a question, they can press the raise hand button. So I believe there are no more questions. So thank you very much, Santoshji, for taking the time out and allowing us the opportunity to host your con call. I think there is one follow-up from Prasenjit. We'll just take that. Just 1 minute. Yeah, Prasenjit, go ahead.
Yeah, thank you for the opportunity. So, sir, as we are discussing about the margin, so can you give me an idea like what kind of margin this legacy system integration business brings, and what kind of margin this Hexadata brings?
Legacy system integration will give you, on an average, around 7 to 8% margin, whereas Exadata typically should give you, and this is gross I'm talking about, Exadata should be able to give us approximately around 10 to 15% margin as of now. Going forward, when we talk about value additions in Exadata, creating product appliances, that enhances our margin.
Okay. Thank you. That's it.
Thank you, Prasenjit. Anyone else wants to ask a question? Okay, so I believe everybody has asked their questions. So again, thank you very much, sir, for taking the time out, and the entire management team of Esconet as well as Fluidec and zCloud for taking out the time and giving us the opportunity to host the call. Thank you and best of luck, sir, for your future.
Thank you, Jigar sir. Thank you, investors and shareholders, for listening, hearing us out, and for your time. Thank you.
Thank you, everyone, for joining the call. We'll now end the call. Thank you so much.